Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we had an okay session last night. I was concerned that things would come in here and fall apart, but they actually were okay. Let's go into the chart. So the treasuries sold pretty hard on Friday, recovered a little bit. There was a bit of a gap over the weekend with Donald Trump saying actually the tariffs on electronics are being moved into a different, well, there's this, it was like this whole drama, but it turns out they're just being moved to a different bucket. Anyways, a little bit of a move, and then through the overnight session, pretty uneventful, a slight uptrend, and we are right back to 111 even or so. Actually, a little bit above 111 even, so that's good. S&P 500 also trending up a little bit. So the treasuries, they moved down slightly because it was it was good, I guess. Which is kind of but the treasuries at way too high of a level. Okay, oil maybe doing head and shoulders sort of a thing here. Well, I wouldn't, a little messy. Probably wouldn't call that a real head and shoulders, but I digress. Those patterns don't matter. Anyways, they are on the upside right now. Gold just looks, holy cow, okay, it was pretty good here. And then, oh my gosh. I guess the further back you go, the better it looks. Silver doing okay too, but they still haven't recovered, right? Gold new high, silver, no. Kappa? No. Japanese yen is still looking okay. Okay, the dollar is weak. Dollar is below 100, well below 100 now, actually touching 99. So that's actually a pretty big drop, okay? But it's clearly not all coming from the Japanese yen. In fact, I would say it's probably coming more from the euro than it is the yen, from what I can see. And then Bitcoin's still trying to kind of recover here. They are at 85,000. So, now today we have two major events. Well, I don't know. The first one's not really major. We have 3 and 6 month bill auctions. We also do have some Fed speakers later in the day. Actually, a lot of Fed speakers later in the day. And at 11 o'clock Eastern time, we have New York Fed inflation expectations. I think that is going to be a relatively important data point. And when I come in and I look at the treasuries, well, it's been a little bit better since we started, but the range is a little bit smaller than usual. The range is a little bit smaller than usual. So the treasuries are giving me some signs that they don't see a whole lot going on today, but it's an extremely illiquid market and they are kind of floating up here. So let's just kind of watch this. Oh, and make sure that our robot is on. Wish I had turned it on before this. That's okay. Maybe the robot will get a signal. Hi, have a good one, Martin. Wait, who? I'm not 100% sure who Martin is. I feel bad. Hey, Octavius. Bloomberg reports Poland's presidential race tightened 5 weeks before the election as frontrunner lost some support following a lackluster debate performance. Oh, that sounds awfully familiar. Larry Summer, Trump is making all the classic Argentine mistakes. First rule of holes is stop digging. Listen to my pod. He has a podcast? Larry Summers has a podcast now? Okay. Wow, what? Mark Mitchell from Rasmussen Reports says, stunning, Trump approval unchanged, but right track back up to 45%. Turns out a trade war with China is what people wanted. A new follower, love your chat. Well, thank you so much. I appreciate it so much, guys. I tell you what, man. Making YouTube content, not easy. Sometimes it feels like a thankless job. So every time that you guys come to the stream and say something, especially when you guys leave comments, even if the comment is just, oh, I loved this video, it was so useful. That helps the channel out so much, and it makes me feel like it's all worth it. Dude, we're getting the beginnings of a reasonably okay trend here. Now, interestingly enough, I'm getting this thing again. So remember, on Friday, we were kind of like, oh, some of our numbers and stuff are different. What's wrong?
Order submitted.
Oh, okay, it's going to submit one. It hasn't had enough bars to be able to do that, but it's going to buy here. We'll see. Anyways, so when I come over here to this chart, it's fixed. It doesn't have the problem today. This chart doesn't have the problem today, at least. It resets at the beginning of the session. And because before it was like cumulative delta was flat until we opened the chart. Okay. But now the tick replay on my this chart is not working. So what's with that? What's with that indeed? Also, it's not showing my spread historically, right? ZN, ZB right there. You see that? What's with that? What's with that? Weird. Keep up the amazing work. I'm learning this, and you've been amazing. Oh, thank you so much. Yep. That just immediately takes my mind to the whole, well, we would like to make a course. Like, you know, I never kind of really got into it yesterday when we were doing the stream in the evening. But with the course, I think I am going to spend some time writing like a book or a course or something like that. But then I think I'm going to make it available like for a monthly subscription or something like that. So if it was YouTube, I could make it like, you know, maybe you pay $50 a month or something like that, and then you get access to the videos. But I don't know quite if those will be great on videos. I mean, if they're private videos, they can certainly be longer, I guess. But I do kind of feel like that text would be better. So I'm kind of torn on that. But I want to have a course that gets into more of the things that are like, okay, here's all of the economic numbers that come out. Here are all of the things that you need to know about them and how they affect different assets, and like the history, like significant ones that have happened in the past and things like that. That's the sort of stuff that I want to put in the course. Let's see here. Joseph Wang tweets, rising yields, weakening dollar, jump in repo volumes, tighter swap spreads, and surging gold suggest an exodus of foreign real money investors. Foreigners hold a lot of dollar assets. If they were to rebalance away, then prices have much more to fall. I think that he might be right, and that is my biggest concern right now. I think that treasuries overall should be moving up, but clearly they're not. And why is that? Well, I think that there's basis trade falling apart. Sure. But I also do think that money is leaving. Like, there is some money that is like, well, monetary policy is going to be looser in Europe. So I'm going to go and take my money over to Europe because they're going to be pumping up assets in Europe. I think that there are some people like Canada that are kind of like, well, we should be more patriotic and we should have more of our money investing here at home, which it is a good thing in the long run. I do feel that that all countries need to be trying to be more self-sufficient, but it's bad for us in the short term if all of the money's coming out of our treasuries, right? Making our interest rates go up. Just thinking about this this bull run that we've had in the treasuries and if it will continue up and the trade that I've got. And it looks like that the spot that the robot took wasn't terrible. It certainly wasn't the best, but it wasn't terrible. I do wonder if I had remembered to turn it on like when I started the platform, if it would have gotten triggered more like 05 half. What the heck? So first of all, why is Thomas Sowell quoting Thomas Sowell quotes tweeting about this? But I digress. Secretary Kristi Noem says the reason Real ID is being enforced is because it's a federal law. Real ID is just going to empower the states to make sure for checking people's residences, their current legal status will be verified. Wait, we're checking people's residences? That doesn't sound... Okay. That doesn't sound like something that you want to see on TV, Kristi. Came back a tick or two. A reset here. Recenter. Oh, yes. And one other thing, just to remind you, normally we go till like 11 o'clock Eastern time, but today... And for the near foreseeable future, we will only be going till 10 o'clock Eastern time. So y'all going to be on your own for the New York Fed inflation expectations, okay? I'm noticing that some of the stock market related subreddits on Reddit are starting to become overtly political in a way that they were not before. What's your thoughts on the Fed expectations? You mean the New York Fed inflation expectations number later today? Well, I don't think that there is a what would you call it? An expectation, like an estimate for it. But I think that what you're going to see is that it continues to stay put and not reflect the inflation expectations from the University of Michigan survey. In fact, might even show a little bit of deflation in the expectations, because the actual like hard data has come in a little bit deflationary. So the really interesting thing about the economic data over the past 3 months is that people's behavior does not match their expectations. There is a divergence between these that we have never seen before. So people are like incredibly negative about things. Democrats in particular are really concerned about a recession and are really concerned about inflation, and their behavior is not reflecting that. They are still acting like, it's a roaring economy. which is very curious. And normally I would just kind of be like, everybody always feels like the economy is kind of bad. There are certainly been some points in my adult life where it's been like, oh yeah, the economy is really, really great. But especially since COVID, even when things were doing great, nobody really felt like it, But that doesn't seem to be what's going on. It seems like Democrats just have a view of the economy that like greatly diverges from everybody else and diverges from the reality, at least for now. They could end up being right. One of the things that I am concerned about now, should I say concerned about? I don't know. But here's kind of the next thing I see going on, right? Like the next step in this saga is, okay, Donald Trump pulled back the reciprocal tariffs on pretty much everybody but China, and then increased the tariffs on China. The actual like net impact, like if we were to measure it in terms of like how many dollars will be raised from these tariffs, right? It's actually like more dollars raised from these tariffs because you're taxing China so much now. Maybe it's a little bit too hard. So that is giving Donald Trump some room to like pull back on a couple of them and like, give the stock market a temporary boost. So I think that what could happen is eventually we will realize and or feel the effects of the tariffs and realize that, oh, actually it is really that dramatic though. And I really don't see China backing off. One of the things that isn't discussed enough is that China has its own set of problems. Like, yes, they've been taking a long kind of term view of things, and the communist thought has definitely been, we need to be completely self-sufficient and all of these things, and so we're going to do certain aspects of mercantilism and capitalism to get things to where we can kind of be in control over everything, and then we'll go full-on communist. Because when they were full-on communists, they couldn't feed people, right? So we just have to develop the economy first.
Order canceled.
Going short here, huh? Well, it's gonna lose 2 ticks on that first trade, though. Has it been 10 minutes? It has. Okay, so I think we're okay there, that it is a legit entry. So, China does have like those long-term kind of thoughts, but then a couple of things happened that have kind of ended up being really, really negative for China. One of them, well, the major one, is that their population is aging and their population isn't nearly as big as they thought. And so China is going to experience population collapse in a significant way, probably. And that's really, really going to hurt them and their competitiveness. And then I think the other thing is that China stopped being the place that's competitive for wages. So a lot of that manufacturing and kind of jobs that were outsourced because there was cheap labor in China are moving to other countries like Vietnam, for instance. It's one that's discussed a lot. And I think a lot of Western countries are saying, well, we should outsource, but just to smaller countries. That way, no one of those small countries can get powerful enough to be a problem like China has been. Right? Okay, so... And then, China's economy has just kind of really sucked since COVID, and they're having like that real estate crisis and all of those sorts of things. Okay, so I don't know why we don't see people discuss this. I kind of suspect that maybe China has a bigger stranglehold on online discussion than we realized, but they're feeling the squeeze. They're feeling the squeeze, right? But that is probably just going to make them more stubborn, because they're kind of going to be thinking, well, if we give this up, our demise just comes that much faster, you know? So I'm concerned that China would really, really push hard and not want to give an inch. And so we've got these like really aggressive tariffs on. The market doesn't necessarily realize how aggressive it is, since he's kind of pulled back. It's still bad. And then China's not going to play. So I think that this drama could get much worse and or go on for a long, long time. Aminish says, I expect Trump to fire Powell. He needs a scapegoat for the mess he made, and he'll fire Powell and blame him. Well, he can't fire Powell, so I don't think that's going to happen. So not only can he not fire Powell, but so how do where do we go back? Because I guess I kind of have to come to I think the key like misunderstanding about this that might lead somebody to say that. So Donald Trump has fired a lot of federal workers and disrupted a lot of federal agencies, right? And the thing is that these federal agencies are set up with pretty vague laws that pretty much give the president complete control over them. The whole thing is that these agencies have been acting in ways that when Trump was in office, he didn't like. And, so he's kind of just gone for the throat and said, okay, well, we're going to start replacing people, and we're going to start shuttering down certain agencies that we don't think are needed, or at least making them less powerful, et cetera, et cetera, et cetera, right? The Federal Reserve is really very different. The Federal Reserve, it's not just, an agency established by a law, but the law has very specific things about how the Federal Reserve Board is set up and created and all of those sorts of things. So Trump literally cannot fire him. He could do things like maybe take away all of their funding and like reduce staff and all of those sorts of things. But he could not just fire Powell. He could choose when Powell is up, which I think is still for another year or two. He could choose to replace him with somebody else, and that probably will happen. But in the meantime, there's nothing he can do. Furthermore, it really seems like Treasury Secretary Bessent is really like the go-to guy on the economy that Donald Trump really trusts. He was the one that was kind of saying the market impact from these tariffs are too much. We need to back off a little bit. That was before Treasury started selling, by the way, too. I think this is this is maybe an important thing to understand possible future moves by the administration. Because everybody thinks that it's because they backed off because of treasuries. So if Trump starts doing something crazy, start selling the treasuries. But it was really actually the overall impact of the economy, and they had already decided that they were going to backtrack before the selling of the treasuries had happened. So you could see moves in the treasuries because of people's belief in that. But in terms of like what the Trump administration is going to do, you can see that even just the stock market getting hit too hard could cause them to back off. But it seems to me that they do have a put, that they don't want the economy to go into a recession. Okay. Anyways, so Bessent is kind of the key one, and if Donald Trump wanted to quote unquote fire Powell, even if he doesn't have, like maybe he doesn't have the legal authority, but he still tries, I think that Bessent would absolutely talk him out of it. So I don't think that is a very realistic scenario. Octavia says the book is still a ghost town, 1 MBO, 400 at 3.5. Yeah, like we got a pretty good trend up, but it is still kind of doing like we are range bound kind of things, isn't it? So the thing that I'm seeing here with my algorithm is that the algorithm seems to do okay in range-bound movement too. Like it can get signals within that range-bound movement, but the problem is that the signal that it gets doesn't match up with the position that it's already in. So if there was a better exit condition, it would do a lot better. If there was some way to say, that there's some exhaustion that they can't push through. Things that we maybe kind of see on the DOM, where it's like they will step up to a price, but the offer just doesn't pull whatsoever, and no real market orders hit it, and they just back away from it. Yeah, maybe he tries to fire Powell. No, because just the impact to confidence that would cause would be so tremendous. His advisors would talk about it. So he will probably try and pressure the Federal Reserve in other ways. Now, at the same time, you know, because I don't know, I would like to see the Federal Reserve step in here. But if I was on the Federal Reserve, would I be advocating that they step in here? Probably not. I don't think it's gotten that bad yet. I don't think it's gotten bad enough for the Federal Reserve. Like, they should be like alert and watching and, you know, reassuring the market that if something happens that they will. But that is what they did. Like, they've talked about it on Friday. They've said, you know, we're ready to step in if necessary, but we don't think it's gotten to that point. Like, that's what I would be saying if I was on the Federal Reserve. And the administration is kind of mirroring that too. They're like, well, you know, things have gotten a little bit scary in bonds, but like everything is okay and the markets seem to be functioning well. So they're saying the same thing that the Federal Reserve is. So I don't know. Where it will become a problem is if we get to the end of the summer. Or maybe let's be a little bit more generous. Let's say like the next 6 months that we don't get any kind of Fed cuts, then it starts to become a problem, right? Right now, the market still expects the Federal Reserve to cut in like July. So if things shift and they don't cut in July, then that's a problem, I think. They stepped in last September to help calm. They did. I have a hard time seeing what it was that was necessary to cut 50 basis points in September and not now. But you can I can see this hint of like, oh hey, good morning, Uzi. Like, I can definitely see, like, politics at work at the Federal Reserve. But, first of all, it seems like they can't be overt about it. In fact, I would argue that the politics at work is kind of probably more subconscious, right? Like Powell's distaste for Trump is coloring the way that he views the world somewhat. And he's going to say that it has no effect on his decisions, but actually it is. That's what I think is kind of going in. So like the Fed can't do something that's like overtly political. So if the economy continued to be down and like the inflation numbers that we're getting continued to show deflation, and you know, monetary conditions are tight, we get through the summer and they don't cut like the market expects them to, then they would have a problem. Then it would start to be like all out. You know, they'd be button heads in public at least. Was there anything news-wise that caused a dump in gold over the past hour? Well, I have not seen anything. I've definitely not seen any headlines since we started about gold. But the decline that we've seen, like $20, I would say is pretty standard for gold.
Order canceled.
I don't think it's a huge deal. So is it? Oh, it's going the other way again. So you see what I'm saying? Like, okay, it took a short in here. Now it's flipping around again, but it's a little bit too late. If you give it like, you know, 1 or 2 ticks more, because it's getting a better exit, then maybe it does pretty okay during range-bound markets too. As it stands now, I think it lost 1. Was it only 1 on the first one, and then it made 1 on the second one? So it should be net 0, right? Oh, not quite. Realized 21.67. But it is in a new position and going long again. And maybe we get a second leg. You're looking at this like, you know, maybe treasuries are going to recover. I would be looking at this as leg 1, leg 2. Except for that, I don't think that we have a whole lot of evidence to suggest that leg 1 was a leg, right? When it comes to this chart. And we look at the cumulative delta through that move, we weren't really seeing a consistent imbalance in the longs. It's a little bit choppy in the delta and so forth. So, and I don't have filters like that for the algorithm. Maybe I should. Maybe I shouldn't. I don't know. Unclear if there's a meta order. So we'll see what it does. Supposedly OpenAI is going to be releasing a ton of stuff this week. They already gave them like released infinite memory. But I think that we're going to get O4. I think. I heard over the weekend China owns nearly 800 billion in US bonds. What would be the impact if they dumped half this? They wouldn't be able to do that. No. To dump half of their bonds would take months. The market would not be able to handle it. So, like, you know, China reduced their holdings. What was it, 2 years ago? Oh, just the bond market in general. The bond market in general wouldn't, there's not enough liquidity to handle that large of a transaction. So if you go back to that period when they were selling, and I can't remember when it was, but it wasn't this most recent kind of decline over the past year. It was like earlier back than that, when they were getting hammered pretty hard before. And well, let's see if I can just pull it up on. Probably I should pull it up on TradingView. That'll be a little bit easier for me to look that far back. So I've got ZN on, but then if I say maybe 1 week chart. Yeah. So I think it was this 2023 time period right here. Like, you know, we were just getting hammered. Maybe it was this one. We were just getting hammered, and nobody was sure why. Like, why are rates rising like this? It just kind of felt like it was coming out of nowhere. And the stock market just largely ignored it. And that was China selling. And they were selling over a period of like 6 months or something like that. They were selling over a very long time period. And that was only like a quarter of their holdings or something like that. So for them to get rid of the rest, like the 800 billion, it would take months. And that kind of takes me to this other thing that I keep talking about, like, okay, why were interest rates going higher? Was it because China or Japan were selling their bonds or something like that? Well, Japan may have been selling bonds to raise funds, but it's probably not something political like, I'm just going to sell to really screw the treasury market up and screw over Donald Trump, that sort of a thing. Because why would you stop, right? Like, why would you, we're just going to sell for this one afternoon and then kind of let up, right? You wouldn't do that. You would just keep pushing it and try to create as much chaos as possible, right? Unless you weren't planning on, you weren't trying to disrupt the market. You have to sell for various reasons. And you want to get the best price that you can for your assets and yada, yada, yada. So that's probably what's going on. And they're going to back off at certain points and let the market recover and everything so that there's actually liquidity there for them to transact into. If China decided to sell all of their bonds, I think that the liquidity would just evaporate, like the market would just cease to function. Just like the headline, like if China came out and announced that they were going to sell, we're going to get rid of all bond holdings, and they just said that they were going to do it, all this liquidity that you see place would just disappear. Nobody would want to trade against them. And they would just let price melt down. And then China would probably hardly make anything on their investment. It'd be really bad for them. So that scenario, I think, is extremely unlikely. It'd be interesting to see if the treasuries get another strong rout later this week, or if things kind of settle down. Because there's definitely a lot of people out there that are looking for like this doomsday scenario where China sells. I really don't think that it's going to happen. I think that you could see market dysfunction for other reasons, though. By the way, I should note that over the past 30 minutes or so, the dollar has been coming back strong. Very strong. So, I'm not quite sure what's with that, but... No. Well, the government only has to honor the coupon payments, right? You have the coupon payment, then the government owes you, whatever the coupon payment was. But if you want to sell the bond, you have to go to the open market to do that. And you can't just redeem, right? You can't just go and say, oh, I don't want this bond anymore. The government will pay you back at any time. No, it doesn't work like that. So if I was like China, like what I would do, if I really, so first of all, this is a scenario where like we sell bonds to hurt the United States. is really probably a bad move. Okay, I don't think that China has any interest in doing that, but China might have an interest in just decoupling themselves from the United States, that they're concerned that the United States won't pay the debts back, etc., 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 right? So what do you do in that situation? Just not buy more, right? Like eventually the bonds that you do have will mature, and then you just don't buy new ones. And then where you see the pain would be at the auctions, when there's less foreign buyers at the auctions, essentially. Yeah, only on maturity do they have to honor the bond, which will be paid by a newly issued bond. Exactly. Harsh, do you trade gold? No. I don't think I've ever taken even a sim trade in gold. But, you know, that's because we're trading the treasuries, and gold tends to be pretty strongly correlated with the treasuries. So, you know, like when I'm looking at other assets to trade, it's because I don't see the opportunity in treasuries, right? So equities is enough decoupled that sometimes there's some situations where I'm like, well, I don't know how this affects the treasuries, but I do know how it affects equities. Oil is another one. You might do something. But gold I kind of consider part of the treasury complex. I still feel really strongly that you know, the primary goal of this stream is to help more people understand the markets, how the market functions, how it affects things, the true nature of markets. One of the best ways to do that is trading. And so I will trade. We teach trading. But my objective is not to make you a millionaire from trading. My objective is to help you understand the markets as much as possible. And becoming a better trader is just kind of a really nice side effect of that, right? But I don't think that should be the primary goal, because the probability of really being strongly successful in trading is pretty low. So we don't want to put all our eggs in that basket, right? So for both your understanding of the market and for possible future trading opportunities, I think it's really important to note that we don't really have any evidence of selling from China, nor do we have evidence of selling from Japan itself. And it looks like most of the reporting and the way that it's behaving and all of that this pressure that we've seen in the treasury market could be entirely to do with basis trades. And if that's the case, you know, things kind of recovering from here, if we get a good up day and start a good uptrend, then that flow could completely sputter out. Let's see where it goes. Today could just be kind of like relax, and then tomorrow they come out, start selling with a vengeance again, right? Okay. Okay. But wait, were we long? Yeah, we were long. Very good. Very lovely. That was a big jump up there. Okay. So the scenario that I was kind of hoping would play out did. We did end up going for a second leg. We ended up going for a second leg. And let's see here. Earlier we were saying, well, we don't know if we're actually getting a long meta order. Like if this was like meta order stage 1 or whatever. But now you can see it very clearly. Yes, we do have a meta order at work. Maybe it was like this and this. And that's kind of weird that it was up through here, even though it was doing that. Do you really think that you can identify meta orders? Well, not perfectly. But I would say that anytime that you have a persistent imbalance in market orders, there's a pretty good chance that it is a large meta order. Yes. The background music makes you too calm. This is the hype playlist with break beats and stuff. And it's too calm, huh? Nice. So you can use meta orders to determine trends. Yeah. Or rather, because cumulative delta and price aren't 100% correlated, right? So I am basically filtering for when they are correlated and using it as a trend indicator. Exactly. Because the whole thing, the like one of the bigger things that I'm trying to get across to people when you watch my videos is that the price itself is not very reliable. So you don't know why they're buying, and there's all of these other things involved, and market makers inject randomness into it. Okay, well, with orders, we maybe still don't know why they're buying, but there's less noise in the imbalance of market orders than there is in price. And so that just makes your job from a technical standpoint a lot easier. So I need to find this study again. Oh, maybe I should be searching for it right now. Somebody on LinkedIn was mentioning that there was a study about reconstructing meta orders from public data. I was like, oh, we got to take a look at that. See if I can find it. If I just search for that on LinkedIn, if I find it. Posts from my network, maybe. They posted past month. Hmm. Here we are. Oh, archive.org has a new, let's see here. This is experimental HTML to improve accessibility. We invite you to report rendering errors. Learn more about this. Cool. Sometimes we'll display errors. This paper introduces a novel algorithm for generating realistic meta orders from public trade data, addressing a long-standing challenge in price impact research that has traditionally relied on proprietary datasets. Our method effectively recovers all established stylized facts of meta orders impact, such as the square root law, the concave profile during meta order execution, and the post-execution delay. This algorithm not only overcomes the dependence on proprietary data, a major barrier to research reproducibility, but also enables the creation of larger and more robust data sets that may increase the quality of empirical studies. Our findings strongly suggest that averaged realized short-term price impact is not due to information revelation, as in the Kyle framework, but has a mechanical origin which could explain the universality of the square root law. Download PDF. You want to put this in our trading, learning, scholarly articles. Oh, let's put that. I thought we had a better. I thought I had a folder that was like called the Q. Oh, here it is. Q. Some reading for me later. Oh, guess who it is? It's Jean-Philippe Bouchot. There you go. Let's see here. Video Starcade. I've been scalping MES, but find treasuries to be very intriguing. Can I ask you what makes you prefer this over that? Yeah. So there's a couple of things. Number one is that order flow signals seem to be more predictive in the treasuries. So in the equity indexes, because it is an index of 500 different stocks, and, you know, the primary users of that are people that are like hedging entire portfolios. The flows in the equity indexes can be extremely complicated. It's not uncommon over there to have moves where the stock market continues moving up and up and up and up and up, and they're selling the futures the whole time because those are just people hedging or whatever. And I don't completely understand those flows or what causes them. So it's very, very difficult to play that game in the S&P 500. Another thing is that it is easier to read the order flow as well. You got these really big numbers. It doesn't move around as much, and so you can just kind of read the changes at any one individual price, and there's a lot that you can learn about the market from that and kind of determine what kind of a market we're in. And then another thing is that because there's basically less volatility in there, it gives you more time to make your decisions. If something crazy is happening, you wouldn't stand a chance of being able to get any kind of a good trade over here because it's moving too fast. But in the treasuries, you know, they just trend up. And I tell you what, when the treasuries trend, they trend. It's just like a steamroller. It's going downhill. Nothing can stop it. You get really good trades. And so I've had much more success trading the treasuries than I ever have in equity indexes. Equity indexes are on very short time frames are mostly random. And Steffa says, I have a problem with my DOM add-on. Jigsaw and my DOM are both trying to access the same data, so there's a conflict. What? From NinjaTrader? That doesn't make any sense. Wouldn't China dumping bonds flood the market and force the US to increase yield to sell them? Well, I mean, if that second part of your question, I don't think really makes much sense. If China was quote unquote dumping bonds, yes, it would flood the market and yields would increase. Yes. If they did that, they would increase considerably. Even if they were selling a small amount of it. Great stuff. I really appreciate it. Yeah, I have a couple of videos about trading treasuries where I kind of go into a little bit more detail about those sorts of things. But okay, well, the S&P 500 for the first 3 minutes here has been kind of down. Oh, by the way, you know what? Let's see here. Which chart is it on? No, it's not on this one. Since we have to go at 8 o'clock, I should change. I think it's on this one, actually. Nope, it's not on this one. Maybe it's on my S&P 500 chart. Yeah, there it is. Line at time. Instead of it being at 8:55, it's going to be at 7:55 because we have to leave early now. So which is makes me very, very sad, but that would leak into, well, it would affect pretty much every market, right? Because almost everything to some degree is looking at their prices relative to the risk-free rate of return. So if interest rates go higher, it would affect everything else. Yeah. Mortgage rates would move higher. Stock markets would probably move lower. Well, isn't that some of what we saw over the past week or two? So we don't have any evidence that it was China that was selling, but there were probably a lot of basis traders and carry traders that were dumping their treasuries, their treasury futures specifically, and that caused interest rates to move like half a percent. Kind of knocking on those highs again in the 10-year. The thing is that if it really was mostly basis traders, again, we don't have any evidence that it's China. I think that we would be getting some reporting if it was China. There might be some Japanese government involved to some extent, though. Not because they're trying to disrupt the market, but just because they need money to deal with things, right?
Target filled.
Ooh, very nice. Okay. Then if it was just those basis traders and that's kind of past, then you have a scenario for the interest rates to come back down very, very quickly. At least back to 4%. Okay, so we exited at 12.5 because that was our target, 12 ticks. I don't like that it has a target of 12 ticks, but that's what we're going with right now because we ain't got anything better for the exit in with that particular strategy. It does seem like that as of late, that's been a really good exit though. So let's see what it does if they push a little bit further, or if that's a good exit. But I should note that as we've been pushing up pretty aggressively here in the treasury, I mean, it's been in that 20k change. Cumulative delta has moved up 20k. So that's not crazy, but that's pretty good. And at the same time, the S&P 500 has been falling. So that inverse correlation is coming back, which is good, but it's not good that the S&P 500 is falling, but I just saw this thread that was like, it was somebody making an argument against Bitcoin, and in the Bitcoin subreddit, and the first response was, yeah, but line go up. It was an initial balance break, wasn't it? Well, like the depending on where you set it, it was at 09. This push above 11.5 is, you know, a second leg or something like that, but one of the things that I'm liking about this, though, is that, like, when you're using price, you're using a price oscillator, it always gets into this thing where it's like, by the time that there's a move coming in, it's like already too much of the move has gone by the time your oscillator triggers or whatever. That is not the case with this. It catches it pretty early on in the trend. Well, there is, oh no, wait, 13.5 was where it was before. I was going to say there was a new high, but it wasn't. Wait, there, you know, like a new high would maybe be enough to say, yeah, I really wish that it hadn't have taken that exit, right? It's interesting. Reddit recommended a thread to me from r/day trading that had 0 karma and was posted 6 days ago. Can you believe that? That's curious. There's a new high. And it was basically something from the Delta Trend guy. Sorry, I forget his name. I really like this kid, by the way. I really want him to, like, he is having a lot of success on TikTok, and I really want him to keep going. He was bashing on ICT. And this person says he thinks ICT actually believes in Enigma. Lol. ICT has made it clear many times he does not actually think Enigma exists or that he coded it. He has explained, and so have others well-known traders, that trading as if the market is controlled by one entity can be beneficial. ICT is simply so dedicated to the idea that he attempts to mental gymnastics himself by repeating the Enigma bit. Maybe. Or maybe he is just a narcissist that says whatever he thinks will help him at the time. But, you know, making some kind of like a broad assumptions about the market, like the market maker will do this in this situation, can potentially lead to useful information. But the issue with ICT is that his assumption is that the market maker is the one that's completely in charge, and they're not. The market maker is only in charge when it doesn't matter. Market maker doesn't like a big, long, strong trend. And that, I think, is the thing that really kills the whole ice, you know, like the entire foundation of their trading strategy is bad. Maybe tonight I can make a TikTok about that. I don't know if I'm going to have a lot of time to make TikToks. Well, I don't know, guys. It's looking like it got a really good exit, and that I should just be like, okay, it did its thing today. It made $162, and we just run with that. Did you do the webinar? What webinar? You talking about an ICT webinar? Does he do webinars? That sounds like a nightmare. I can't stand listening to that guy talk for more than 60 seconds. Oh, yeah. 2 weeks ago, you offered a webinar. No, but I don't think that anybody registered. Yeah, okay, sad. Well, you know, I didn't necessarily expect it to happen. I think that there's like, you know, like one thing is the price. You know, it's a lot. I think to do like a webinar like that is what I would need to charge to justify it. But that's why I was saying maybe what I can do is I can turn it into a bunch of videos and just make them private videos that you get if you sign up for like a $50 channel subscription or something like that. There's it seems to me like a lot when I was going through So when I was going through and I was trying to price this, and I was like, okay, what are other education programs like? What I found most often was that most influencers had a community instead, where you paid like $50 a month, like at Convergent Trading, right? You pay $50 a month, and there's certain stuff that you get with it, and that also gives you access to the education. So I'm thinking about that, and it's like, okay, so like over the lifetime of a subscriber, you know, if you're charging $50 to $100 and they stay around for a year or two, then it would make about the same amount per person, and it would work out, and you get like monthly income from it, right? So that all makes sense. I'm just the thing that's holding me back right now is, but I don't know if making private videos is the best format for it, right? Because I've got a lot of content. A book, I think, is I'm making a book, and the problem with that is just that the YouTube subscription kind of setup doesn't work as well for that. But maybe I can just make it a download that you get from Discord, and you sign up through the YouTube channel or something like that. Or maybe you can do it separately through the YouTube channel or through Discord. I don't know. But I at the same time, I really think that, especially for guys like you and stuff that are here every day, there would definitely be a lot of I think it would definitely be something that you would enjoy reading and everything, but you wouldn't be the primary audience, you know? I think the primary audience for it would be people that are just starting with day trading. So we do get a lot of those here too, as well, you know? Yeah. Because again, the kind of information that I wanted, like, I think that a third of the book will be dedicated just to all of the regular economic reports that come out and explaining what they actually are and how they affect different markets. And then I think that another section of the book, that's maybe like a quarter of it, would be different assets and the forces that are involved in those assets, you know, mostly commodities essentially. Yeah, if you make an audio version and voice it. Yeah, because I'm thinking, well, because I was thinking, the goal was to have a program that was 16 hours long. So I don't know how I split that up. Maybe I turned it into 16 videos of an hour each. Something like that. If I made videos, I would maybe have something where, like, some parts with the chalkboard and maybe other parts where I'm just showing you PowerPoint slides. But that's kind of the thinking on that. So if I turned it into a subscription thing, then that would maybe, and it started doing well, then that would maybe free me up enough to be putting like game plans or daily reviews or things like that. And then I'd be able to give you guys even better day by day kind of content. So that would be kind of the next step off that. And then whatever we would make from it, well, maybe it would turn into, that's just provides me income so that I can focus just on that. That would be cool. But then I think you save it all up and use it to fund development of a trading platform. Yeah. I could even do it something like, another issue is like, okay, so if I made it a book and it was like a download from the Discord, that would be like too easy for people to pirate. Like, I know people are going to pirate it and that's okay, but it shouldn't be easy, So maybe if it was a book, an easier way to do it would be to like self-publish on Amazon for, like $300 or something like that. Farbod, what's your opinion for a set stop loss based on ATR? Well, okay, so first of all, if you're going to be using ATR, like ATR on like a 1 minute chart, I've done a lot of testing with that and it's not very effective. So if you're talking about like a daily ATR, then that's different and that can help. That can help. But for intraday trading, I've found that, setting your trades based on some percentage of the ATR doesn't really, it's better than like a set stop loss, but it's still kind of subjects you to the same problems. Essentially, that the performance of your strategy has mostly to do with the volatility and randomness of the market. And you're not able to get the kinds of distributions with like a lot of really big positive tail events and things like that. So, generally speaking, like the bigger issue is this, Farbod. Almost every algorithm that I've ever tested does better the larger the stop is. Even better if there's just no stop whatsoever. So like this algorithm that I'm running right now, it's been working great. It's been working absolutely great. Made 162 today on one contract in ZN, and you could size that up. No stop. It's taking a lot of risk to do that if something super crazy happened. I guess it could lose. It has a stop at like 12 ticks. So like something that shouldn't happen very often, right? And that's kind of the way that I've kind of resorted to trading with my discretionary trading too. Like there is a point at which I stop out, but like I have a stop that's like it should never be hit. Like that should only happen if I'm in a position and something crazy happens, like some news event comes and there's a limit move against me. It's the only time it should ever be touched. And I'm kind of more like, well, if the flow goes against me, then I'll get out. Rather than looking for it to move a certain amount. So it's a real conundrum with algorithmic trading. Is that you have to have some kind of a stop, but any kind of stop that you put on seems to reduce your profits. But you have to protect yourself against catastrophic loss. So another thing I would say, so like I really hate that the algorithm has a set target right now, but I tell you what, every time that I get it and I take it off and it tends to come back on us. So I don't know why, but if you
submitted,
or actually, probably a better example would be like, okay, so you have some sort of daily loss limit, right? Like if you're trading a funded trader program, especially, you can't lose more than $500 in a day, right? And so some people, they will say, I have a profit target. They'll say, I will trade for, I will trade until I make $500 and then I stop for the day, right? And that's terrible. That's terrible because you've got this distribution, right? And these are the tails, right? And if this is a distribution of your daily profit and loss, if you come in here and you say, if I lose more than like $2,000 in a day, then I stop. Then what you're doing is you're essentially destroying this whole side of the curve, which is great. So that helps you. That tends to help you. You add that to a strategy, stop trading if the daily loss goes over a certain amount. That almost always improves the profitability of the strategy. But if you set a target, you're getting rid of this tail. And this tail is where the real money is. You want to expose yourself to that tail. You want to get more of these tails. You want that distribution to maybe be more like this, where, you do okay most of the time, if not losing, but then like once a month you catch a winner that's just so great it makes up for it all. So that's the sorts of things to know. I was thinking about making a video that's like, where should you set your stop loss? I don't know if I really have enough to put in for a video. Because the answer is basically like, don't have a stop loss. Okay, well, so I wasn't expecting to take a trade here. I've got to get going. I guess what I'm going to do is I'm just going to leave the platform going, but we are going to stop streaming here. So, but I got to get going. Work. So I will see you guys tomorrow. In the meantime, stay